Hey folks, Joe Valley here. Welcome to the Quiet Life Podcast. Thank you for joining us. We are doing a little look back of what 2022 was like and a look ahead for 2023. And I'm doing it with this guy that he might have founded Quiet Life back in 2007. And I think did one podcast last year, and heck, it might have been the most popular podcast. I'm not really sure. I don't look at the stats anymore because when he comes and does a podcast, it's usually better than mine. So welcome back to the Quiet Life Podcast, my partner, Mr. Mark Daoust.
That's right. My name is at the beginning of the podcast, but I make my once per year showing. So it was good to be able to do this. We did this last year, and it was a fun hour to be able to look back on 2021. Obviously, 2021 was such an incredible year, and it's always fun to look ahead and try and predict. Did you listen back by any chance to last year's? I didn't. I probably should have.
Is that what we're supposed to do as professional podcasters? We're supposed to listen to the previous year's episode and try to repeat it? Because I'm just a total screw up if that's the case.
Yeah, if we were professionals, we would probably do that. But, this is not our day job, so that's a good thing.
No, my aspiration is to be more like the guys on what's the podcast? Smartless podcast. Will Ferrell, Jason Bateman, and their buddy Sean from Will and Grace. Those guys just throw on their PJs, flip the microphone on, and just start talking and having fun and telling stories, and then have the guests on. There's no preparation whatsoever. And honestly, that's kind of what I've always done. I cannot remember the last time I've edited anything out of a podcast unless it was complete idiocy on my part. I think you're the same, right? You don't edit anything when you record, do you?
Yeah, but the idiocy is so high. I only have room to do one podcast per year. Otherwise, it would just be
there'd be so much editing. It would be like the intro, and then thank you for joining us. Have a good day.
Pretty much.
Yeah,
absolutely.
I hear you. All right, 2021, as we all know, was a record year in the history of M&A. How was 2022 in your view, Mark?
It was better than I anticipated it to be. I think we started off 2022. We started off rocky. January was a bad month, and it was the first bad month we had experienced in, a long time. And so it was a little arresting when we got into that. We had all this momentum leading up to the end of 2021. And, when you're riding a roller coaster, I don't know how long it's been, Joe, since you've been on a roller coaster. It's been a while for me. But you're riding on a roller coaster and you're still going fast, but then you come into the end and they always apply those brakes so hard right at the end, right? And everyone jerks forward and then jerks back as they're pumping the brakes. January was that moment where we were coming into the station to reset and see where we were. We had just ridden the roller coaster of 2021. It was a blast. It was a thrill. There was a lot of new things. People were screaming, and I'm pretty sure somebody vomited along the way. But
I did. It was exhausting.
Yeah.
It was nauseous the entire year.
2022 was a time for us to really take a step back. We saw aggregator markets pull back really, really heavily compared to where they were the year before. And can I just make an unpopular take here?
Yes.
I'm so glad. I'm so happy that they did. There was all this money raised. When you raise money like that, there's a pressure to spend it, right? People don't invest in a company so it just sits in there in the actual operator's accounts. It needs to be deployed. And that was setting up kind of a crazy market. And I saw this setting up, and sure, right, we're going to ride that wave. But you look at it and you think, how is this going to end? Is it going to end well? It's a little bit scary. I think some sanity has taken over in the marketplace in 2022. And with that transition came a little bit of pain, a little bit of a pullback, but not as much as I thought it would be, to be honest. Our numbers still ended up very, very strong from where they were the year before. And the end of the year with an elections, for just context here, I've been through a lot of elections since I've owned Quiet Light. There are always periods of pullback in the M&A market. But no one likes uncertainty. And so elections introduce uncertainty. And so I fully anticipated a bit of a pause, and there was leading up to the midterm elections. But then the end of December, boy, things picked up just where they were at more of a normal level and seeing some pretty healthy activity, signs of health in the market, which is encouraging. Well, what about from your perspective, Joe?
2 words: confusion and fear. Right? That's my look back at 2022. There was a lot of confusion in the marketplace with, what was going to happen in the recession with, Thrasio semi imploding, the aggregators all pulling back, right? People thought, oh no, there's never going to be an FBA business sold again, which, by the way, folks, is only a small fraction of our overall transactions. So there was a lot of confusion there. But really what happened was that it opened up like this crack in the window where the light could come through, and that light was all from individual buyers. They're like, thank goodness, get out of the way, aggregators, because we can finally buy these businesses again. They've always been there. We sold lots of businesses before aggregators ever showed up, and we continue to after they've pulled back on their purchasing frenzy. They're still there, but a lot of confusion because of interest rates going up. Right, the inflation. The Fed wants 2% year-over-year inflation. We hit 9%. Interest rates going up, buying power coming down. A lot of confusion there, and then the fear of a recession. We had, if we didn't have the fear aspect of it, Mark, we would have grown by 25 or 30% over 2021, which was a record year. And the reason we didn't was because these transactions were under letter of intent. And then fear took hold from the buyer's perspective or the lender's perspective behind the buyers, or some of the folks like, in Brad's deal, where Brad had a deal that was close to $60 million and everything was approved until you got deep into the, the money aspect of it on the board of directors, and they pulled back because of recession fears. If we didn't have the fear aspect of it, I truly think that we would have grown 25, 30% over 2022. And as I look back, you talked about January of 2022, we would have grown over 21, January 2022. And again, you and I, in our lack of preparation for these things, we talk off the cuff. If we looked at QuickBooks, I would imagine that December of 2022 had a ton of transactions close just to get it in before the end of the year. And things were closing quickly in 2021, right? In 2022, the time from letter of intent to close transactions grew. I don't have the exact number, but it took a longer period of time for things to close. And then in December of 2022, as you and I know, we had a record month slated to close, but because of fear and that longer period of time, buyers didn't pull back and cancel the transactions, but they're trickling over to January of 2023. So we're going to start off with a killer month in January of 2023, whereas January of 2022 was kind of ugly, as you said.
Yeah, absolutely. And some of the more surprising stats, and I bring these up because people throughout the year have asked, hey, what does the market look like? What does it look like over the course of the year? What are you seeing? Right. And we take a look at Centurica puts out some nice reports right now. They have shown a decline in some of the activity being done. And you can see this across the board. There's been a general pullback as far as the number of transactions. But when we start to look at the actual metrics of the transactions, what we see is that deals that are being closed are closing for higher multiples and with more offers per transaction that are closing. And it's counterintuitive because we're hearing pullback. But what's going on there? My theory, and again, this is a theory, and we all are trying to do some introspection to understand what's going on, is that there's still a lot of money in the marketplace, and people are still looking for good quality businesses to buy. Where we've seen the slowdown is 2021, there was a voracious appetite for businesses. Facts be damned, right? We could have businesses that probably shouldn't have been acquired get acquired, or probably shouldn't have been acquired at the prices that they were being acquired at get acquired because there was so much appetite for these businesses. And now, 2022 saw those businesses not do as well, take a longer time to find a buyer, and definitely lower multiples on those businesses. But the high quality businesses, there's still a great appetite. There's another trend that's been happening, especially towards the end of this year, which I found very encouraging as we head into 2023. 2021, so the end of 2020 and the beginning of 2021, my inbox was flooded with new aggregator requests for conference calls. We want to introduce ourselves to you. We're looking for businesses. Here's our grand plan for what we're going to do over the next year. We're going to acquire a gazillion businesses, right?
Note the sarcasm, folks.
Yeah, right. It was literally multiple calls per week, and it was actually exhausting at the time, to the point where we brought on Deanna just to be able to handle those. And as soon as we hired her, those actually pulled back really significantly. Well, those calls have picked up again, not to the same level that we saw before, but we're seeing more and more of those calls with funds or aggregators or groups that are looking to get into the acquisition game, or they have plans for more acquisitions in 2023. Those calls are picking up again. That's a really nice leading indicator of a better appetite in 2023 than we saw in 2022. I've told the team this time and time again. In this space of M&A, the transition periods are where we see the pullbacks. Bear markets, bull markets, I don't know what it's going to be. I'm not going to sit here and say it's going to be a bull market or a bear market. I'm feeling a little more bullish than I have in a while, but it's the transitions that are difficult. Certainty is where acquisitions happen.
Yeah, I agree.
We're going there.
And part of the problem here is that, the history of recessions in our lifetime as an adult and in this industry as professionals, it's only the one that we had in 2008, right? It was horrible. It was the Great Recession. It was just really traumatic for a lot of people and hurt a lot of people financially. And that's our experience with recession. So we think going into a potential recession that the sky is falling, it's going to be awful. And I think the fact of the matter is it's not going to be. I just read this morning, Jamie Dimon, whatever, I don't know how to pronounce his last name. I read it, but I never hear it. So is it Diamond? Do you know? You don't know either.
No.
He's the head of Bank of America, I think, or Morgan Stanley, one or the other. And I'm sure I'm getting that wrong, folks. Just send me an email and correct me and tell me what a moron I am. If I'm going to read facts, if I'm going to quote things, I need to get it right. Anyway, he is the one that said there's a hurricane coming in the economy, right? A year ago. And I read something this morning. He goes, yeah, maybe I shouldn't have said that. It's going to be cloudy. It's not really going to be a hurricane. It's going to be cloudy. I'm like, so why do we listen to these people at all? I oftentimes amuse myself if I'm watching the news. I'll watch 10 minutes of CNN, and then I'll flip over to Fox, and I get a completely opposite view of what's going to happen. And it's the same thing when you read one article after another, what's going to happen in the economy. So I don't think, like you said, no predictions to be made. All we can tell is what's happening in our world and in our business. And the aggregator pullback did cause a lot of confusion. The inflation, it causes a lot of fear. But that opening for the individual buyers is there. It's there in a strong way. And I think it's going to continue to grow. And that's part of the outlook for 2023. I got an email the other day from somebody in the area that I live in that runs an incredible company. He's got a friend of his from college that lives up in Michigan that is tired of the winters. He's in his 50s, and he's going to exit his company that he works for. He's an employee at his company, and he wants to buy an online business so he can live anywhere in the world. So he reached out. As we mature, there are going to be more and more people that are individual buyers that are wanting to step into this world in which we live in, where we can work remotely from anywhere in the world. So I don't think there's going to be a big slowdown in the marketplace. There are more online businesses that are maturing and wanting to sell, and there are more people that are understanding that it's not as big of a risk as it was when you first started back in 2007, and I joined this race back in 2010 when the average deal size was like $125,000. Very different today than it was back then.
It is very different today. And again, I would just emphasize, I'm not going to make an economic prediction. I can see a case for both, a growth in the economy or a decline. I really don't know. We'll listen to Jamie, see what he has to say, and then realize that even the guys that are paid millions of dollars in their positions are wrong. So I'm not going to sit here and make my prediction. I'm sure the listeners here have their own opinions as to what's coming. The things that do affect our market would be the interest rates, obviously, because the borrowing cost of money becomes higher. And so you have to take that into consideration. And then the actual books of our clients, right? So if they're seeing a decline in their revenues because consumer demand is going down, that would be something to pay attention to. It doesn't get rid of the the appeal of acquisitions, especially in the space, though,
or the desire to sell.
Or the desire to sell, absolutely. And so there's going to be good supply and demand, I believe, throughout this year for these acquisitions. Yeah, we'll see. I mean, maybe next year, Joe, you and I will become slightly more professional. We'll listen back to this and hear just how incredibly wrong we were on things, or
No.
how much we understated things as well. I mean, it could be one or the other.
Not doing that. No, not doing that at all. It's an interesting time, I think, Mark, because if we're even in 23 with 22 or down slightly, that's okay, because I truly believe that when we get through this fear and confusion, that there's only upside on the other side. Unless as an M&A company, you were just pulling back and tightening things up and sort of like in your shell waiting for things to get better, which we're not doing. We're out there, we're going to events where, Chris, our CMO folks, Chris Moore is doing a great job, educating people all over the world about the M&A space in the online world. And I think that we're positioning ourselves for a great upside once we're out of this fear and confusion phase. We've got a great team, and I think that we're helping as many people as we can understand the value of their business, whether they want to sell today or in the future. As far as what it means for buyers and for sellers, I think that for buyers, for the great businesses, you're not going to get a deal, folks. There's no super bargain hunting. That was part of the confusion in Q1 of 2022, because there was, challenges in the marketplace, challenges in the economy. Buyers thought, hey, I can get a deal. I'm going to go in really low. It didn't last very long. They found out that, good businesses are still selling at a high value with multiple offers. I think the multiples are up slightly on solid businesses. It's those businesses that you mentioned where margins are tightening, where sales have gone down, where the trends are not as positive as they once were, that is exhausting the seller, where they're saying, okay, look, I'm ready to move on to my next adventure. I'm willing to take less. That might be the only opportunity for buyers to get a bit more of a bargain. The brand isn't in trouble. It's just that the economy hurt things and the seller is tired and they're ready to move on to their next adventure. For sellers, you guys got to do what you got to do, right? Sometimes you can hold on until the market is perfect and your business is growing and you get maximum value. And sometimes you just at a point in your life when you're ready to move on to your next adventure and you sell. If your business is still solid, you're going to get a strong multiple. Or if you can hang on another year, Mark's not predicting, I'm not predicting, but maybe you hang on and you'll have a stronger multiple. Or you come back and say, hey man, things are getting better now. But if we look at your trailing 12 months, and this is a year from now, you probably ought to wait another 9 months to, get rid of the last, 9 off your trailing 12 so that your business is worth what you want it to be worth. It's a crapshoot either way. It's a gamble either way. But I think that it comes down to, for sellers, and people always say, when is the best time to sell? And the answer is when it's right for you more than anything else. I think you actually said in a podcast you just did recently, the answer was never, right? The best time to sell. It's really when it's right for you, personally and professionally, what's going on in your life. So I think 2023 is going to be, could be much of the same as 2022 with a little bit less of the fear and confusion, with a caveat, right? As Janet Yellen says, there's a path. This is what you need to do, Mark, when you talk about predicting. There's a path to a soft landing. There's a pathway to a soft landing. But if things outside of our control, look, we haven't even mentioned, right, the war in Ukraine. That is part of that fear and confusion that affected 2022. It affected gas prices going up, and all of that affected inflation and the economy and people's spendable money. And it's all part of it. And if more of that happens in 2023, if China decides to invade Taiwan, if the Ukraine war, gets exacerbated, all of these things, if those things blow up, there's going to be even more fear and confusion, and that may keep things at the same level as they were in 2022. If not, like you said, you've got a little bit of positive hope, right? A little bit more positive outlook than you did at this time last year. I've always been more positive and a bit more rosy picture than you, a little bit more optimistic, and sometimes that bites me in the ass, sometimes it doesn't. But I kind of feel the same way. It's a little confusing still, but I feel very positive about 2023 and beyond for this marketplace.
Yeah, I think the reason I feel a little bit more positive about the future, 2022, the conversations I had with so many people over the course of that year was, we know it's coming, right? And it was, we know it's coming. We just don't know when. We know it's coming. And look, we saw at least the opening, the opening ceremonies for a potential recession. There could still be a recession this year, an official recession, because last year was not an official recession, it wasn't declared one at least. And so we could still see that this year. But I think that we have a much better feel for what does that actually look like. And that's where I see some certainty, which is good, right? And I think people need to be comfortable with the conditions that they're going into. And I think that's what we're seeing here. So I don't think, 2021 was an outlier. It would be a rarity to see a repeat of 2021. And personally, as great as it was for Quiet Light and for every M&A firm out there, I mean, we grew our revenues by almost 100% that year. I don't want to see that for the market. I think it's not healthy necessarily for the market to have that level of growth. But I do think that we're going to see some solid growth. I do want to pivot though, Joe, to internally with Quiet Light and talk a little bit about 2022 and the changes that we made internally with Quiet Light. We brought on a lot of
our
staff.
business. You're going to share our business with you. That's
just
very personal.
Bit.
All right,
just a little bit.
Just leave all my F-bombs out of it, okay?
We do have a rating system, guys, internally for our strategic meetings, weekly strategics, and we rate it at the end of every meeting. And we have a very, very strong correlation between the number of F-bombs Joe drops in the middle of those meetings and the quality of the meeting. So it's like our version of a swear jar. If we want good meetings, he has to lay off the F-bombs, although sometimes they're well placed and very much needed. Anyway, back to
I'm sorry, I'm just tangent. Yesterday, as I dropped an F-bomb, not only did I drop it, but I pushed my chair back and I stood up and I had my desk rising all at the same time.
It was a very dramatic shot. It cinematically, it was beautiful. 2022, we brought on a lot of people. 2021, 2022, we brought on a lot of new staff with Quiet Light. For years, we've built this company on the backs of the advisors and the quality of advisors that we have. Successful entrepreneurs who've been there, done that. They've gone through an exit personally. They've gone through an acquisition personally, and fairly significant in that realm. And that's given them an incredible advantage when trying to guide other entrepreneurs through their own exits, because they've been there. They know exactly what it feels like. They also know some of the pitfalls that they ran into. It's a very, very useful background for them to have. And so we've built this company largely on their reputations, largely on their abilities and their skills. But over the past year and a half, 2 years, we've really started to focus on building the back office for Quiet Light, the support staff for them, the marketing team, our DevOps team, and a new advisor success team. And last year, as we saw a minor pullback in our numbers, we, of course, had all of this new staff going through, frankly, a learning curve. And you and I, Joe, trying to grow up and be real managers of a company and figure out how can we manage this group in an effective way and create a really good working environment. So I'm going to now put you on the spot and just say, what grade would you give us over the past year when it comes to that side of the business, which we've been actively trying to build out?
I think emotionally, probably like a D-, right? I think it was a very emotional year for us because, we built this company, and for years we were so proud of the fact that we built it based upon what we're really good at, which is leaving people alone to do their jobs really well, which meant we didn't have staff for the most part, right? The advisors are all very successful, driven entrepreneurs that protected Quiet Light's brand and reputation by helping people first and foremost. And then all of a sudden, we've got people that we have to hire, which means we have HR stuff, we have payroll stuff, we have people that it turns out are double dipping, and they kept their full-time job and then took a full-time job with us, and only for us to discover it 6 months later, and us wondering, gee, why did they say they didn't need benefits even though they're a single mom? I mean, it's just all sorts of confusing stuff that you and I have never ever wanted to deal with because we have no interest in it, yet here we are because we've grown and we need to have the support staff to help the advisors do more of what they're good at and less of the detail stuff. And we need more people like Deanna and Sam and Lauren to help with people that are trying to reach the advisors and tell us about what their buying criteria are. It was a challenge emotionally for us, but in terms of business wise, I think we did pretty damn well. Anytime I tell somebody, hey, look, yeah, we were down a little bit. We were down about 15% year over year. If things had closed in December, we would have been even. If things had closed at the same rate they closed at in 2021, we would have grown by 25 or 30%. They're always like, really? Wow, that's it? Oh, that's amazing. It's incredible. So I give us a pretty good grade business-wise in terms of what we've done. We've taken, again, personal stuff here. We have tripled the amount of money the cash reserves that we can keep in place. Even though I think we're going to be okay in 2023, I think it's going to be a strong year. I think it's important that as business owners, we solidified the business with more cash reserves, with more high quality support staff that are going to support the advisors that then can then support the entrepreneur community out there. So I think we did pretty well from a growing up business standpoint. We've got the right people in the right seats. I think emotionally, we screwed up a few times. I remember we had a conversation with some folks back in July, and we talked about the outlook for 2022, and we were dead wrong, right? We were very pessimistic back in July, or actually it was August. I know because I just came back from vacation, 2 weeks in Maine, on a lake in Maine, folks. It's just magic. And then you come back and, you're back in the swing of things and you forget you were there for 2 weeks. And we were very pessimistic at that time, and we turned out to be dead wrong. So emotionally, D-. Maturity business wise, I think we did pretty damn well. I don't know if I have a grade for it, and I'm exaggerating on the D- though, of course. What's your take? How do you think we did?
Yeah, I'm like you. I mean, it was a year of learning. We learned quite a bit, and I'm fascinated by the processes that you have to put in place to be able to run a remote company. Now, for the people listening, a lot of you do run remote companies, and you're familiar with some of the challenges. But there's different grades when you're running a remote company. If you have mainly contractors, it's fairly easy, right? The expectations are very, here's the project, I need the result back, right? Or here's the standard, I need that standard maintained. Pretty simple. When you get to W-2 employees, things go haywire. And without getting too political, I will just say our government does not make it easy to have W-2 employees at all. Especially when you're looking at multi-state employees. We have employees in multiple states throughout the country, which means that we have to comply with state requirements throughout the country. And each of these states have different requirements as well. And then there's tax implications for that. And there's insurance implications. It's complex. It gets complex very quickly. In addition to that, as you said, we built this company with the advisors in mind initially. They're successful entrepreneurs. They're driven. They have an idea of how to take ownership. I think that is something that is more rare to find among salaried employees, not impossible to find. I think the people that we have right now with Quiet Light are extremely driven. They have a great sense of taking ownership over their domain and their responsibilities, and they've really excelled in that area. But we're learning how to be good leaders for that side of the business. And that's taken some time, and we've taken our lumps over the past year with some of those decisions that we've made. But I think we're also learning this. I know, that my one podcast will air this year outside of this one, Joe, with Amir from Daoust.com. We talked a lot about running a remote company and some of the unique challenges that come up with running a remote company. I personally, it helps me get up in the morning. I enjoy the challenge of running a remote company, and how can we leverage the strengths and the benefits of being remote, which a lot of people want to be remote coming out of the pandemic. So how can we leverage some of the strengths that we're able to offer there, along with the expectations that we do have and the needs that we do have from our employees, which is to probably be more responsible and more trustworthy than the average worker that goes into the office, because guess what? We're not babysitting them. We're not watching them over their shoulders in the office and requiring them to be there every day. So grade-wise, as far as that side of the business, I would give us a C, right middle of the road. primarily being lifted up by some of the rock star people that we do have in some positions, and the great work that they've been doing, and just so excited about them. And I think that we ended the year very, very strong with starting to identify, how do we do this in a way that makes sense, in a way that's good. So I feel good. I feel like we are much more, we have a really solid foundation with the company right now to be able to grow. We'll add a few more people this year, not a lot, just a few more people. And I think we have a solid foundation for, frankly, years of growth without needing to add a lot of people.
That's exciting.
That's exciting.
That's exciting. I think one of the things we've just done it, folks. If you're growing like we have, and you're needing more and more employees, remote or in-house, we just hired a fractional HR company called Fully HR, and I'm so excited about it because Mark, it's always been on your plate to do a lot of that detail work, and it's difficult and challenging when you're not excited about it. And so having understanding what our own personal strengths and weaknesses are, and not doing the work where we have great weaknesses, and finding companies like Fully HR to do the fractional HR stuff for us, and manage payroll and hiring and firing and policies and things of this nature. Now that we're having to grow up because the industry's growing up, we're growing up. I think it's an important thing to do. I agree with you in terms of the foundation that we've built, in terms of the growth in the future, because like you said, the explosive growth in terms of the staff and overhead that we've had in 2022 is not going to repeat itself in 23 and 24 and 25. We've built up a great support staff that's going to allow the company to grow even further without adding much overhead whatsoever, which is what it always was, right? From when I joined in 2012 all the way through 2020, there was hardly any overhead at all. Yet we continue to grow every year, 55% from, I think, 2018 to 2021 or 20, not actually 85% in 2021. So 55% on average for the 4 or 5 years before that, without having much overhead at all. And I think now we're in that position again. It's just been an interesting transition for both you and I, as people that always have worked remotely in our professional careers. And at Quiet Light, our team's always been remote. To have actual employees and having to manage them and incentivize them and keep them happy and give them benefits, right? Health benefits. That's us growing up. So good on us. And I think overall in the marketplace, I think 2023 is going to be a good year. I think 2024, unless again, as Janet Yellen says, there's those outside factors that you can't control. Unless some crazy stuff happens in the world, I think we're going to be looking good in the future and the present in 2023 as well.
Absolutely. Well, I will just round out the episode with this. We owe a huge thanks to our team, first and foremost. I sent out an email to the entire team yesterday about just an example of somebody internally living up to one of our core values, which is fostering a culture of generosity. And we've had a number of instances where we can look towards our team members fostering this culture of generosity. It's made this company an absolute joy to be a part of, to found and to grow and to be a part of and to work with these people every single day. We've managed to avoid somehow those toxic politics that can enter into companies and make it just a bare and awful place to be able to work. And that's a testament to the people and also the value that they have brought to the industry as well. From the marketing team that is going out there producing pieces that are truly educational, something that we value very highly, being education oriented as a company, to the advisors who oftentimes are giving freely of their time without necessarily getting a client out of it, knowing that they're not going to get a client out of it, but still wanting to do the right thing to help somebody. So first, a thanks to the team that is behind Quiet Light that has really grown this company. I may have founded it one day, but I certainly have not been the person who has been the reason for the growth. That is entirely the team. Then secondly, to all of the
I thought you were going to say me for a second there.
Well, you're part of that,
just for a moment.
Yeah,
I owe it entirely to Joe. No,
you have a slice of the pie.
Okay,
I say how big, but it's there.
Slice, yeah.
It's a slice. We also have to thank some of the friends of Quiet Light as well. The people from various communities who have influence in their communities, who have who have been just good people. Our whole approach to business is incredibly simplistic. We just want to work with really good people. And I think we've been very fortunate that there's been some incredible people in our immediate network that we could look to and just say thank you for being good human beings first and foremost, and wanting to do good business. And then finally, to the people here listening to the podcast, to those who have worked with us, who have trusted us with their businesses, to the buyers who've bought through us and inquired through us and have given us feedback. Again, all sorts of appreciation for every one of you. It's a blast to be able to work with you and to see the incredible things. I'm always blown away, and from day one of this business till today, I'm blown away by just how many incredibly intelligent people there are and talented people there are doing things that I never would have been able to imagine.
Well, I mean, it's you, so that's sort of hard to, the scale's pretty low. I want to give a shout out to, as you mentioned, our clients, right? And I want to call out one individually, and I want to ask everybody listening to consider giving him a shout out on Twitter as well, or Facebook, or Instagram, wherever you can find him. It's Ramon Van Meer. He is the quintessential client at Quiet Light. Not only is he a great client, a great entrepreneur, he's become a good friend, and he's a damn good human. And on top of it all, he just became a U.S. citizen, Mark.
That's awesome.
So everybody, if you can track him down, Ramon Van Meer, give him a big shout out and congratulations. If you're in the U.S., Ramon is now an American citizen, and we're better off because of it. So congratulations, Ramon. And thank you, everybody, for listening in 2022. And in 2023 in the future, we'll be here for you. Looking forward to some great stuff down the road ahead.